Well, there was no way to sugarcoat the market mood today, and that was a deep red. Look at the way the global markets were actually panning out in trade, with heightened scare and fear around the Omicron virus now spreading fast. The Indian government as well on high alert. Asia had a deep gash, a 600-point fall in Japan, 1% down for Shanghai, 2% fall for Hong Kong, and Kospi as well, which was lower acutely by 2%. And even periphery markets like Australia as well were fairly dampened in today's trading session. And that was the case with European markets as well. They've started off with deep gashes, about 1 to 2%, over 2% actually is the kind of gash that you've seen across the European screen as well. And while we were winding up for trade, there was no respite even for the Dow futures. It seems like it's a global rout out there, and we as well got swept in the swarm. So you had the Dow futures as well scaling lower by a good 600 points, and was a near 1.6% cut coming in for the Nasdaq as well as the S&P futures too. So typically then 16,600 as well was breached in today's trading session, while on close we managed to resurrect just a shade above that level. Still, it's been a damaging cut of nearly 400 points that you've seen on the Nifty futures on closing basis. That said, all sectors bled today. Of course, there were a few like a pharma, like some of the FMCG names, which fell a lot less. Pharma perhaps was the only pocket of green today, wherein the market breadth closed in with just 9 stocks holding out in the green. Cipla, Unilever, Dr. Reddy's, Glenmark as well as Oro Pharma were just the handful of names that you could count literally on your fingers. The damage, of course, was far deeper for an AU Bank, which was down over 10% on the futures, FSL, LT Technology Services, Interpol's Housing, Bandhan Bank, BPCL, Tata Steel, Tata Motors, Reliance, Kotak Bank, HDFC Bank, ICICI Bank. All of these bled quite hard, along with, of course, globally linked sectors like metals. And it was interesting to note that even though IT as a sector has managed to hold out for the last 3 consecutive trading weeks, today IT as well caved in, and you had massive selling, especially in the mid-cap IT names as well. So clearly, traders and investors throwing in the towel just yet. But that said, the big question is whether you buy the dips in the market just yet. But most experts that we've been chatting with, well, they do believe that you should definitely be keeping your shopping list or buying list ready. But wait for the poison to get out of the system a little bit, and wait for this excessive selling to somewhat at least stall. And then perhaps one can look at buying the dips in the market, but not just yet, because right now it seems that it's getting a little bit relentless out there, and you don't want to be caught in the wrong side of things. That said, the texture of the market, of course, is looking extremely bleak. With today's fall, we've officially fallen a good 10% from the October peak for the index alone, and of course the damage for individual stocks has been even more excruciating.